break down what's happening in the market and tell you how it impacts you. So today is Wednesday, November 5th, and we are marking the 36th day of the government shutdown, which is the longest in U.S. history. And the ADP employment report, well, that came out today, and it's showing 42,000 jobs were added in October, which is better than expected, but still very weak. I mean, in fact, over the past 3 months, we've only seen a total of 10,000 jobs that are created. Now, small and mid-sized businesses, well, they've actually lost the most jobs, and they employ about 75% of Americans. But even the big companies that are showing gains, well, they're announcing layoffs that haven't even hit this data yet. Now, half of all job sectors that are tracked by ADP are showing declines. And the only real strength came from education and health services, which, well, they tend to hold up even when the economy is slowing down. Meanwhile, the leisure and hospitality, well, they're a key sign of consumer health. They just posted its third straight month of job losses. Now, when we look at wage growth, well, that has cooled down too, with job stayers, they're at 4.5%, and switchers are at 6.7%. Now, a year ago, these numbers were climbing fast, but not so much now. On the auto side, sales have dropped from 16.4 million to 15.3 million, and largely because the EV tax credit has expired. But with auto delinquencies hitting an all-time high, especially for subprime borrowers, lenders may tighten up, making it very hard for people to get approved for auto loans. In the housing, Catality reported a small 0.2% dip in home values for September, but prices are still up 1.2% year over year, and they're forecasting a 4.1% increase over the next 12 months. So this means a $500,000 home could gain about $20,000 in value, and with 10% down, well, that's a 40% return. Mortgage activity, well, that slowed a bit last week. Purchases were down 1%, refis down 3%, with rates steady around 6.31%. Year over year, though, guys, purchases are up 26% and refinance is 151%. Now, keep in mind, this data is from last week, and that's when rates moved up a bit. So they may cause volume levels to drop further in the next report. So bottom line, guys, job market is hanging on, but just barely. So this report, well, it doesn't make the Fed's decision about cutting rates any easier in December. So that's your Mortgage Minute. I'm Maureen Lein with Rate. Thanks for watching. And if you like what you're hearing, please hit the like button and share. And I'll see you next week.